what is brokerage account? A brokerage account is a bit like a bank account, except that your money is being held by a stock brokerage agency. These days, you can easily set up a brokerage account that will let you buy and sell stocks and other financial instruments like bonds, ETFs, mutual funds, options, or even futures contracts. They are also called standard brokerage account. Individual account. It is just one person is responsible for the account. A joint account is multiple people are responsible for their account. Cash brokerage account. A cash brokerage account is one that requires you to deposit cash before you can start trading. In other words, the brokerage won't lend you any money and you can't spend what you don't have. If you want to buy a stock worth $20, you have to deposit at least $20 into your account and use those funds to complete the trade. Margin account. On the other hand, a margin account, as opposed to a cash account, allows you to borrow money to make trades. The broker essentially doubles as a lender, giving you what amounts to low-interest loans for the specific purpose of making trades. Retirement accounts. A retirement account is the same as standard brokerage account, but the only difference is that it is taxed different from a standard brokerage account. The biggest difference between them is how it's taxed. The most common two types of retirement accounts are: traditional IRAs offer tax-deferred growth potential. It is best suited for an individual who expects to be same or lower tax bracket. On the other hand, Roth IRAs offer tax-free growth potential. It is best suited for an individual who expects to be in a higher tax bracket when he or she starts taking withdrawals. Education accounts. One of the most popular types of accounts to pay for education expenses is the 529 savings plan. Education accounts are commonly used to fund academic-oriented expenses. These are tax-advantaged accounts, and withdrawals are tax-free if used to cover tuition, books, and room and board. Custodial accounts. Custodial accounts are investment accounts for minors, people under the age of 18 or 21, depending on the state. Though held in the child's name, these accounts are managed by an adult custodian, typically a parent or guardian, until the individual reaches the age of majority. Two types of custodial accounts: Uniform Gift to Minors, UGMA, and Uniforms, Transfer to Minors Act, UTMA. The biggest difference between the two is that with UTMA, the account can hold real estate as well as security stocks. Another benefit of a UTMA account is that transferring your assets to the minor is relatively simple, especially if the custodian should die before the minor comes of age. While UGMA accounts are a little less flexible than UTMA, UGMA accounts limit the assets to cash, different types of securities, and insurance policies. Higher risk investments, like stock options, are not permitted. UGMA accounts consider the child an adult entitled to their assets at age 18. Unlike UTMA accounts, all states in the U.S. allow you to open UMGA accounts. Final thoughts. The most important consideration in finding a brokerage account is whether you'll be able to do everything you want with your investments in a way that's comfortable to you. The best brokers offer the support their customers need without being pushy about it, at a price that's right. And last, I would say brokerage accounts are ideal for savings that are further than 5 years away, but closer than retirement.